Hey there, the Daily Discussion Ticker viewers. Welcome back to another thrilling episode. This past week in the stock market was a real nail-biter, full of twists and turns that left investors guessing and on the edge of their seats. From June 24th to June 28th, we saw a mix of gains and losses, proving once again that the market is as unpredictable and volatile as ever. Buckle up, because we're diving into the action-packed week. This week, we saw a classic case of market volatility with rapid changes in stock prices. Early gains were tempered by mid-week losses, only to be followed by a surprising late-week surge. It was a roller coaster ride that left some investors feeling queasy and uncertain. But hey, that's the stock market for you. Always full of surprises. The takeaway? Hold on tight and don't panic, no matter what happens. Volatility is part of the game, and it's here to stay. The major market indices painted a mixed picture this week. The tech-heavy Nasdaq continued its upward trajectory, hitting new all-time highs. Investors just can't get enough of those high-growth tech darlings. Meanwhile, the Dow Jones Industrial Average and the S&P 500, with their heavier weighting in more traditional sectors, faced some resistance. Concerns about rising inflation and potential interest rate hikes put a damper on investor enthusiasm. Remember, it's not just about the overall market direction. Pay attention to sector-specific trends to make the smartest plays. The stars of the show this week were undoubtedly the tech giants. Apple, Amazon, and Microsoft continued their relentless march higher, fueled by strong earnings reports and optimistic outlooks for the future. These companies are at the forefront of innovation, and investors are rewarding their dominance. From cloud computing to e-commerce to artificial intelligence, these tech titans are shaping the future, and their stock prices reflect that potential. Bottom line, tech is still hot. But remember, diversification is key. Don't put all your eggs in one basket, no matter how tempting it may seem. Section 4. Volatility Vortex, Energy Stocks. Take a tumble. While tech stocks soared, the energy sector experienced a turbulent week. Oil prices tumbled on concerns about oversupply and weakening global demand. This sent shockwaves through the industry, with major oil companies like ExxonMobil and Chevron feeling the heat. Remember, energy stocks can be highly sensitive to geopolitical events and economic data. Keep a close eye on oil prices and global energy demand to navigate this volatile sector. Section 5. The Fed speaks. Interest rates and market jitters. And now, for the moment you've all been waiting for, the Federal Reserve. This week, Fed Chair Jerome Powell gave his semi-annual testimony before Congress, and investors hung on his every word, analyzing every detail. Powell acknowledged the recent uptick in inflation, but maintained his stance that the Fed is in no rush to raise interest rates, despite market pressures. He emphasized that the central bank will continue to support the economic recovery and monitor the situation closely, ensuring stability. The Fed's words have the power to move markets, so pay attention to their signals. Interest rates can impact everything from borrowing costs to corporate profits. So stay informed and adjust your investment strategy accordingly to navigate these changes. This week, several stocks made significant gains while others faced notable losses, reflecting the volatile nature of the market. Let's dive into the details and see who came out on top and who struggled. On the winning side, we saw impressive performances from companies in the renewable energy sector, which continues to gain momentum. SolarTech Inc. soared by 15% after announcing a groundbreaking new solar panel technology that promises to increase efficiency by 30%, a significant leap forward. Investors are clearly excited about the potential for growth in this green energy powerhouse, seeing it as a key player in the future of energy. Meanwhile, in the tech sector, Quantum Computing Solutions experienced a 12% jump in its stock price, marking a notable achievement. This surge came after the company revealed a new partnership with a major cloud services provider, aiming to integrate quantum computing capabilities into mainstream technology, a move that could revolutionize the industry. The future looks bright for quantum computing solutions as they continue to push the boundaries of innovation and technological advancement. Additionally, FedEx saw a 10% increase in its stock price after reporting better than expected quarterly earnings and announcing a new strategic partnership with a major e-commerce platform. Investors are optimistic about FedEx's growth prospects and its ability to capitalize on the booming e-commerce market. However, not all stocks fared well this week, highlighting the market's unpredictability. Retail giant Megamart faced a 10% decline after reporting weaker than expected quarterly earnings, a disappointing outcome for shareholders. Supply chain disruptions and increased operational costs have taken a toll on their bottom line, leaving investors concerned about the company's short-term prospects and future stability. Another notable loser was Aerodynamics Corp, which saw an 8% drop in its stock price, causing concern among investors. The aerospace manufacturer announced delays in the production of its new commercial jetliner, leading to skepticism about its ability to meet delivery deadlines and maintain customer satisfaction, a critical issue for the company. As always, the stock market is a dynamic and ever-changing landscape, full of opportunities and risks. While some companies thrive, others face challenges that can impact their stock performance and investor confidence. Stay tuned and keep your eyes on the market trends to make informed investment decisions and navigate this complex environment.